Welcome back to the IB Investor channel. In this episode, we're going to have a look at SBB in its most recent quarter. And as you can see here on the bottom left corner here, the share price did trade down quite massively here at minus 8.24% during today's trading. So obviously the report were not appreciated by the market. Now for a big summary of this company, they announced a new group structure and strategy. They have reduced the debt by 20.5 billion here, Swedish kroners in the past 15 months, and the financial stability and liquidity remains a priority. We can see also that the net operating income has increased by 12.5% here like for like, and the 86% of the gross debt has fixed interest rate here at an average interest maturity here of 3.1 years, and we'll take a look at much of these later on in this video. However, continued pressure here on the property valuation, so value decrease of 8.9% for the period, whereof 2.7% in the quarter. So they are still writing down some assets here in the most recent quarter. And here we can see on the right side a little bit how it looks like in terms of value by segment here. And we can still see that Sweden is still the biggest property value here by country. We can also see some short information here about the company, but we'll go through this more in detail further on in the video. So now for some information that not necessarily were news when the earnings report came, but rather it was announced previously. But what happened here was that SBB sold the final piece here, the majority control, to Brookfield. So they offloaded a 1.16% here of Educo to Brookfield so that they lost the majority control to the company. And SBB will then deconsolidate the business here in the fourth quarter after closing. So they have to close the business first, and then it's going to happen. So here we have some updated figures on how the remaining company will look like here on the left side. So the left side of this here will be the remaining company of SBB, and this is basically Educo, the discontinued operations here in the middle. And then we can see SBB in total here for the total company, so we can see the different numbers here. But yeah, we have to wait until that actually happens. We haven't seen it yet, so it could happen in any day here since we are currently in the fourth quarter right now. They're also telling us here that earnings per share are almost unaffected by this change, so quite a surprise, but you know, it is what they're telling us at least. So now for a small surprise here for my sake at least was that this number actually increased here. So you can see that the loan to value here in the most recent quarter actually increased to 53%, and the previous quarter here was 52% here, as you can see. So it actually climbed here by 1 percentage point here in the most recent quarter. So kind of disappointing, but what's expected though was the interest coverage rate here. So the interest coverage ratio here declined from 2.9 times to 2.6 times here in the most recent quarter. It was kind of expected because most companies within the real estate sector are struggling with the earnings capacity here and with higher costs and everything. So it was kind of expected that this number would decline, and I would expect that this number going into the coming quarters here, all else equal, will decline as well. So it wouldn't be a surprise if this number were to go to like 1.4 times or something in the next quarter, because it's just those times. It's not just because of this company, but rather the sector as a whole are struggling a lot. So anything actually below 3 is kind of bad. If it's below 2, it's alarming. So this company still has some margin here before it goes to below 2 times here, but still investors should look at this numbers in the coming quarters here and follow this number, because if it goes below 2, then yeah, it's a big risk for sure. Now for the positive side of this business, we can see that they do actually have an average interest rate here of only 2.29%, which is actually very low, all things considered. So it's not 4%, it's not 5%, but a low 2.29%. So very positive for this company actually. And we can also see here that the average debt maturity here is 3.7 years, which is also good. However, even better is this number here, as we can see the 1.77 here. So this number means that the average interest debt of with maturity later than 2026, and I would assume it's 2027 up until beyond 2030 here, has an average interest rate here of 1.77%. So they have long financed their debt here at very good levels. So it's only the short-term stuff here, the Q4, the quarter that we're inside of now, and 2024, which they have to refinance here, pay off those debts. If they do have to refinance those, it's probably going to be at a much higher rate than this. I can't say exactly how much it's going to be because I don't know, but I would assume it's not a 2.29% anymore as an average. It would be much higher, maybe twice that of this, or maybe even more. So it's the short-term pressure here from the lenders here that they have to pay this off somehow. I'm not exactly sure how, but they have to fix the short term. Otherwise, they risk paying a much higher interest rate here going forwards. But looking at this, it's the long term, which is the story play here for this company, if they can survive that long. Management has done a good job here, reducing the debt here by 22.6 billion Swedish kroners here for the trailing 5 quarters here. So we can see here in the most recent quarter, it sits at a 75.6 billion Swedish kroners, which is down roughly 5 billion here from the previous quarter, actually a little bit more. So, management here is paying down the debt in the company right now, which is good. And they are looking to divest more of the assets that they have and probably take in some equity partners here too. Offload some of this debt levels so that they can bring in some cash here to pay down the debt further here. Now for some credit ratings here from the credit institutes here. So we can see that S&P 500 here, short-term a B credit rating here, so not very good. And this was updated here on July 28th this year. Negative outlook as well, and a CCC plus here. So this is basically on par with junk. So not very good credit rating here from S&P, and Fitch here paints pretty much the same picture here with a B rating here for the short term, and this was updated here on 21st of August, and negative outlook, and also for the long term here, negative outlook and a B minus. So a little bit better here for the long term, but it is under watch here, so this could be a CC plus here within weeks, days. I'm not sure exactly how often they do these, but I think this can be good to understand as well, that this company is under financial stress. So this is more like objectively than not just some random investor telling us the credit rating of this company, but rather big institutions telling management here and potential investors for loans and so on that this company does not have a good credit rating right now. And this is from their own webpage, so this is not numbers that I'm making up. It's from SBB's homepage, and you can find it yourself also and see these numbers for yourself if you don't trust me, but it can be good to know these scores at least. Now for some unusual details here, we can see that the company here has announced that they have some credit facilities here that are unused here, 3.5 billion, but that they cannot use it right now. And the reason for this is that they have too low of a credit score, as we saw previously. So they have received these promises previously, but since the downgrade happened here, this company is below investment grade, and that means that they cannot use the credit facilities here, 3.5 billion Swedish kronor. So management here urgently has to go back to investment grade here in order to use this credit facility. Otherwise, they cannot tap onto this. So another big reason why management has to drive back the credit rating here up to investment grade again. There are so many benefits of having investment grade, and this shows once again that they have some issues here that they're struggling with. So I think it can be good for investors to bear this in mind, that this company is under huge financial stress here. So some interesting information that has surfaced today after the most recent quarter from SBB. So this guy, Joachim Landström, has a PhD in financial accounting and finance, and he basically calculated the consolidated solvency ratio here to 68.8% here, as you can see on the left side here. So that far exceeds the financial covenants here. So he's basically telling us here that SBB has broken a second financial covenants here, which is basically a promise or agreement here, which was entered into by the borrowing party that SBB have borrowed money from. So, you know, it's just an add-on here that piles on to why this company is so exciting. There's so much drama about this company. You know, you never know where this company is going to land when you look at numbers like this. So it's just another thing that just happened today, which has not been announced or picked up by anybody else here. So, and he wrote this on Twitter. I can link to an interview actually where he explains a little bit about this at one of the Swedish biggest news medias here. So I'll just link it in the comments below and you can read it further if you want, if you're a Swedish speaking person here. We're not going to dwell on this too long, but a new group structure and strategy were presented during the quarter here. And the interesting stuff here that I think surfaced, I'm not sure if this was known previously or not, but SBB Residential Properties here, a joint venture, they issued some preference share here of 2.4 billion Swedish kronor here to Morgan Stanley. So I'm not sure if this was known in advance or not, but at least they have been able to raise some capital here. And we are going to just take a brief look at this here as well in the next few seconds. So they have divided, you know, the company into 3 focused business units here, and yeah, improves access then to bank funding. So it's just, you know, that they see some upside here, that they can finance the 3 business units separately better compared to a big company as they have done today. Now for the group structure here, and we can see the residential here on the left, the community here in the middle, and education here on the right. So it's the education part here that it's probably going to be the joint venture here pretty soon, since they don't have the majority interest here in the coming weeks, I would assume. So it's going to be, you know, reduced to a joint venture here pretty soon. And this is the community part, which is the business area that they want to keep, and the reason is the biggest yield here at 5.28%. So you can understand why they want to keep this, and this is also quite index linked here. So the rental income will increase, you know, every year with index here. So, and the worst area here is the residential here that they want to get rid of yesterday if they could. So it's the least valued here by property value as well, though, but 29 billion, so it's still a big company, so to speak, in the structure. It has the lowest yield as well at 3.65%, so not very good for this company. They need as much yield as possible here in order to drive, you know, the rental income here. So, you know, it's the left side here that they want to get rid of as soon as possible, and they want to keep the middle, and the right one they have already, you know, made some divestments here. So in the future, it's the community that they want to keep and build on. The rest, if they could choose right now, they just want to, you know, exit as soon as possible. But education at least have a higher yield compared to residential. So if they have to choose between these two, the education and residential, they would keep that education part as the favorable business here. But it also looks to me that it's probably much easier to offload the education part because of this low yielding residential side of the business. If the residential had like twice the yield, you know, like 7% plus, they would have kept this for sure, you know, because residentials, the market in Sweden for residentials is actually very, very good since we have a housing shortage. But the problem is the low yield. If the starting yield was much higher, then they would have kept this business pretty much. But just quite interesting just to see the overview. I think it's the first time I've seen it in this type of breakdown. So it's probably because of this new group that they made, the new structure, that they made these numbers available, the different yields, I think. I think the biggest risk here is basically, you know, there has been claims here that the interest coverage ratio and the covenant here for the bonds here, that it has been breached, not just once, but obviously twice here, as we saw here with the insolvency ratio here as well, exceeding 65% here, which isn't mentioned actually in this report here. So, you know, the biggest risk here is that in the event that the legal dispute should be initiated and the court finds that SBB has breached the condition on the interest coverage ratio. There is an additional risk that the conditions for assumption of going concern are not fulfilled. These above factors indicate that there are material uncertainties that may cast significant doubt as to the company's ability to continue as a going concern. So this basically means that, the auditors here are telling investors here that, if they were to lose in court here and the bondholders wins, this could be the end of the company. So, quite a dramatic statement here, but certainly a serious one. I've never seen anything like this in a report previously. So this is kind of interesting just to read as a speculator right now and looking into this company. But I think investors and speculators on the side should really, take this into a big concern here and, thread carefully here, going forward. So quite shocking information here. So with that, I think I'm going to end this video. Thanks for watching. Please like and subscribe for more content. Bye-bye.